The US markets ended with deep cuts, and that is something which we are seeing in the Asian markets as well.
It was an operational weak quarter for Axis Bank.
7 out of 10 intraday cash market traders incurred losses.
Ford came out with earnings. I mean, that's an indicator of sort of the manufacturing real economy.
Bulls will want to fight back and get it closer to around the 20-day image. So that's important.
L&T, no negative surprises. That's the good part.
SBI Life, it was a mixed bag.
150 points lower, 24,253.
Most important thing that I wanted from the budget was it does no harm.
Fight for deposits is quite intense. That is an arguable fact.
Nifty Bank, though it's recovered a bit from the lows.
It's a top-down miss for Nestle. In fact, it's a weak set of numbers.
Can a cess on mineral output be levied by the state government?
We expect significant volumes going forward to come from two-wheeler segment.
To compensate the states for the period when the GST growth rate was fairly low.
Well, that's a day so far, and it's a very, very good-looking screen. You know, what can I say? Once again, day after day, event after event, demonstration of resilience. This is Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema, Nigel, and Surabhi is going to be with us in just a bit as well. Guys, hi, good afternoon.
Hi, afternoon. Absolutely remarkable, right? The Nifty opened at levels of 24,200. The picture across Asia was deep in the red. Hang Seng is closing with a cut of more than 3%. Hang Seng, the Korean markets, Kospi down 1.7%. Europe too is bleeding right now, 1.5% gone on the CAC and the DAX. And here we have it. The Nifty is on the verge of breaking into the green, just down 1 point right now. The sensex is down 0.05%. The mid-cap index is in the red, but it spent some part of today's trading session in the green too.
You know, in the morning I was worried I picked the wrong shirt color. So I think now inadvertently it's the right shirt color. You know, what can you say? So it's just a couple of points. Nifty is absolutely flat, and this is in the face of a 4% cut on the Nasdaq, right? 4% cut on the Nasdaq, and you've got the market which is actually in the green, almost in the green. Most of Europe is lower, not dramatic, but 0.75%, 1%. Asia largely all ended lower, I think, except Taiwan. All other markets were down. And you've got this reaction. So once again, I think the flows will bear it out later today in terms of what institutions have done and where this perhaps buying has come through. US macro backdrop is solid. I mean, if you look at payrolls and Fed trajectory, all of that stuff is okay. At the margin, stronger dollar is a bit of a risk. That's one of the Trump ways markets expresses the so-called Trump trades, a stronger dollar. But the issue is really tech earnings, and earnings not just in the US but here also are is essentially the issue. And the bar is high for earnings to really surprise after stocks have done so well. And of course, there is a bit of extended positioning as well. I looked at mid caps and small caps; they're absolutely flat. A little lower today, but flattish is what we have on the screen right now. Lots of single stock action, and that's how we'll spend our time over the next 60 minutes here. Surabhi is with us as well. Surabhi.
Guys, what should I say? This is a market that cannot fall. It cannot fail. And typical wisdom, traditional wisdom tells us that's not how it works. But then our market is a market that's turning all kinds of traditional wisdom on its head, right? Given the kind of global cues that you guys discussed. This is absolutely phenomenal.
Yeah, no, I was going to say that not traditional wisdom, all wisdom.
All wisdom, yeah. Just all wisdom on its head. I mean, it is a buy on every dip market. You get a little worried, you get a little scared, but maybe that's just, you know, old people thinking and talking. It is what it is, and for the time being, I mean, every single dip in this market is getting bought, irrespective of the reason behind the dip. It doesn't matter. There are buyers and more buyers. I just want to sort of pull up some of the result reactions today. By the way, we've not had too many hot reactions. Ashok Leyland came, numbers were, well, subpar, just below estimates. Then you had Nestle. Nestle's volumes, nothing much to write home about, that 1% volume increase. You had Canara Bank, which was actually better of the lot. We'll get more as we go along. But the fact is that you don't have too many earnings which are really putting the screen on fire. Either there's some additional buying on a Petronet LNG, for instance. I mean, brokerages have been optimistic. Banks continue to be a big watch point, not taking our eye off on away from Axis Bank. It's still down 6%. By the way, when we say buyers are coming in, they're not coming in on the banks. That sector seems to be sort of, dealing with its own set of issues and problems. But for what it's worth, the Nifty is absolutely flat, rock steady and solid. You know, Nigel, I'll tell people, in fact, they can probably go on social media and check out this picture. Anuj shared a picture with me. 7 years ago, Anuj and I were at the NSE because that's the first time the Nifty had hit 10,000. Now we're at 24,000. It's a very, very different market, I think.
Well, indeed. Those are the days, right? 10, 15,000 odd. We're 25,000 and on our way higher. So good times for our markets. And as you all said, today, the markets had plenty of negatives that it was faced with, but the buy on dips really continued. And just one couple of points, as we had that wrap that was coming in there, I made this point earlier today, the 24,200 mark is extremely crucial today. We went within 10 points of that, and from there, we've seen a bit of a bounce. So the reference point on the downside becomes a 24,200, and now we're trading above the 20-day MA. On a closing basis, you want to end higher than the 20-day MA. That's on the Nifty. On the Nifty bank, earlier today, we said the 50,500, 50,600 mark is extremely crucial. The 50-day MA is around there. We've gone to them, and in fact, we have bounced towards that from that level. Now, important to build on from here because the Nifty bank's bounce hasn't been as much as the Nifty. So for the final hour of trade, given that we have the monthly expiry that will play out, keep an eye out on the Nifty bank. If it can cut its losses, we'll see a further bounce from here. Otherwise, if the Nifty bank wants to go ahead and revisit the 50-day MA, we could see some bit of a slide from these levels. The question is, how do you position yourself in the final 60 minutes of trade? Ashish Kayal joins us to help us out with that. Hi, Ashish. Well, buy the dip is working till now, but do you think, we still have some unfinished business on the downside, or do you think we're up and away from here as well?
Hi, afternoon to you and all the viewers. If you look at Nifty, there has been an absolutely resilient move. We can clearly see we moved down on the budget day, but we recovered back sharply. We moved down, gap down today also, recovered back sharply from there, filled the gap. So overall, the tone looks to be positive. 24,200 continues to remain a strong support. And now if we manage to cross back about 24,430, there can be some kind of a short covering from the sellers at 24,400. Those call sellers can try and cover their positions, taking the index back toward that 24,480, 500 mark. So the overall tone remains bullish. I think over here, any dip, if you can get, again, use that as an opportunity to buy, aiming for the target of 24,480 on the upside. And very interestingly, one point is that post 4th of June election time, if you check on the charts, Nifty has not given a close below the prior day's low since 4th of June. That happened only once, and that was an outside candle, which does not change the trend. That's a very classic way of seeing that the momentum is still intact. There is still not a lower high and lower low, and we have not closed below prior day's low, even now after all the events that has happened. So the tone is buy on dips, aiming for 24,480 and possibly higher back towards that 24,700 mark is what I'm thinking.
Okay, is there any stock-specific, any stock-specific action that you would recommend for trade?
Yes, if you look at Sun Pharma, I think the stock has given a very strong breakout in today's session, and it has formed a rounding bottom kind of a pattern showing good volumes. The sector is also supporting. So long positions can be created in Sun Pharma. Maintaining a stop loss of 1605, we can expect a target of 1800. And the next stock on the buyer side is Zydus Life, a very classic higher low pattern. Simple Dow theory suggests the trend is bullish, taking good support at the 20 days average, bouncing back from there again. And we can expect it to reach towards the target of 1300, maintain a stop loss of 1160 on the downside.
Pharma has actually moved up to the day's high. Even the Nifty Pharma index is up close to about 0.7%, and insurance has turned out to be the sector of the week. SBI Life, 3% up today. This week, it's seen a 13.5% gain. And the other one is HDFC Life, 15% in the last 4 trading days. But on the way down, it's the banks playing spoilsport, particularly Axis Bank. But Federal Bank is bucking the trend and is up 1.5%. Abhishek is joining in with some brokerage calls. Abhishek.
Well, to begin with, take a look at the comparison between the two. Now, Axis Bank is finding it tough to grow their deposits. Deposits declined by 0.6% quarter-on-quarter, while Federal Bank, on the other hand, has grown their deposits by 5.4% quarter-on-quarter. So, resources coming in lower has impacted the credit growth as well. Advances have grown by 1.6% for Axis Bank on a sequential basis, while good resources that they have received, Federal Bank has made use of it, and the advances have grown by 5.4% quarter-on-quarter. Take a look at the slippage ratio. Now, Q1 is seasonally a weak quarter, but Axis Bank has seen their slippages rise by 38% quarter-on-quarter, and it's higher than analyst estimate as well. While Federal Bank has also seen their slippages rise by 14.3% sequentially, but it's lower than what analysts had predicted. So, gross NPA in absolute value increased by 7.2% quarter-on-quarter for Axis Bank, while it has increased by 4.5% for Federal Bank. ROA movement, Axis Bank lost out its ROA by 35 basis points sequentially. On the other hand, Federal Bank has been able to improve their ROA by 5 basis points on a sequential basis. Even on ROE, it is down by 4.6% for Axis Bank on a sequential basis, while it has improved by 0.9% for Federal Bank. So operating profits, if you take a look, has declined by 4% quarter-on-quarter for Axis Bank, while it has improved by 35.2% sequentially for Federal Bank. Gross NPA ratio for Axis Bank, it's increased by 9 basis points, while on a sequential basis, while for Federal Bank, it's declined by 2 basis points on a sequential basis. In the con call, Axis Bank has guided that credit costs will increase from FY24 levels, while on the other hand, Federal Bank says that they are on course with respect to their ROA target of 1.4% by FY26. So we have some brokerages notes coming in. Citi has downgraded Axis Bank to neutral. Target price has been put at 1,320 per share, while on the other hand, Citi as well as Nomura has increased the target price for Federal Bank. MK and Investec as well has increased the target price for Federal Bank post their numbers. Back to you.
Okay, all right, Abhishek, thank you very much for that. Literally, these bank stocks making big headlines today. Dilip Bhatt is joining in, founder at Pedigree Advisory. Dilip, thank you so much for being here. So let's start off with the banks, because it's been a bit of a disappointment. HDFC Bank, obviously, we could sort of, leave it out, say it has its own merger issues it's still grappling with. But even with Axis, and the market's reaction is very, very clear. Issues in terms of high credit cost, again, the struggle to mobilize deposits. What is your advice on banks? Are you using the dips to buy, or is it time to stay away till these issues are sorted out?
Well, I think the HDFC Bank, Axis Bank, the results really point out to the fact that everybody's struggling for the deposit growth, without any doubt. So much so that if you were to revisit HDFC Bank, they recalibrated their credit growth to the kind of the deposit growth that they're going to have. So I think it's telling you a lot of things. When two leading banks are struggling to grow the deposits, so the question is, how is the credit will be growing? And then what happens to the NIMs? So I think all this point towards the fact that the banks as a sector possibly will move sideways. There may not be some very serious correction, but I think it will spend some time before it emerges out of this particular shadow of the struggle that they're going through. So what I would say is that banking as a sector, yes, if it falls, one should certainly look at it, but one should not be in a hurry to buy from the current levels, because I think we'll see everything. We'll see NIMs being under pressure, and maybe the credit cost, what Axis Bank has shown, maybe there's some small indication, but it's too early, I think, to really wave a red flag on that. But otherwise, the private sector banks and banking as such possibly will give you an opportunity to buy. One need not be in a hurry to rush and invest.
Tomorrow, IndusInd Bank reports their numbers, and then on Saturday, you've got ICICI Bank. And IndusInd Bank has been an underperformer. I think it's down on a year-to-date basis by close to about 13%. But ICICI Bank has been an outperformer, 20% gain year-to-date. So the street is going to be watching deposit mobilization and even the credit cost, which spiked up for Axis Bank. Those two metrics will be keenly watched. Dilip, afternoon. Thank you very much for joining in. Lots of, mid-cap numbers have also come through over the last, couple of days. You had United Spirits, etc. Jyoti Labs is higher. Anything that catches your attention where you would recommend a buy now or looks attractive?
Well, I think on a broader basis, the prices don't support the valuations. And while the results have not been all that great, not been all that bad, even if you see United Spirits also, I think the results were pretty okay, but nothing really to shout about. But what I would say is that the real challenge before all of us is whether do we chase the prices from these current levels or whether we wait and watch. I think from the fundamental analysis point of view, the interpretation is that some of these stocks, certainly one should wait and watch. One should not be in a hurry to buy. And we all know that in spite and despite all the problems, the money supply has been pretty good, especially from the domestic and the retail side. So that will still drive the prices, or maybe the prices will hold on. But what I would say is that I'm not really so excited about even the mid cap, because I think mid caps are trading at a very exorbitant valuations, the ones which we like. And that being the case, I think we will just wait and watch for a while. Did not be in a hurry to buy.
Okay, all right. Dilip, stay with us. We have to take a quick commercial break here. And we'll come back with more on the other side. We'll put the spotlight on stocks which are buzzing from the auto space as well. There is Tata Motors going up, and there is Ashok Leyland which actually is on the downside. So stay with us. All of that coming up.
Welcome back. Let's shift gears now to the auto space. Tata Motors is the big winner on the Nifty, 5.5% on the back of a Nomura upgrade. Hormuz joins us to tell us more. Hormuz.
Big upgrade coming in there for Tata Motors from Nomura. They've upgraded their recommendation to a buy from the earlier rating of neutral. They've raised their price target to 1294 from the earlier target of 1141 or 1141. Now this 1294 is the highest price target for Tata Motors on the street. And this is because they see that JLR's execution can lead to significant upsides going going forward, is what Nomura is having to say, and which is why they have raised their target multiple to JLR for JLR to 3.5 times EV to EBITDA from the current 2.75 times. They also say that the current demerger of the CV business that they are undertaking will unlock significant value going forward, and their EBIT margins have the scope to rise to 8.5% this year, 10.1% in FY27, and even to 11 to 12% by FY30. And that is on the back of the rundown of the Jaguar, the ICE versions of the Jaguar, the success of the new EVs, and the more premium Range Rover variants that the company plans to bring out going forward. They also believe that the net debt for Tata Motors may move to net cash by FY26 and 27, and as a result of which you are seeing this big up move for Tata Motors, the stock almost contributing 25 points to the Nifty upside, the top gainer on the index today.
Okay, and what about Ashok Leyland? Looks like a bit of a margin miss.
It was a margin miss. So the numbers were a miss on all fronts, but what the street looks to be taking heart is the commentary from the management. I'll take you to the numbers first. Revenues were up 5%, but they were below the poll estimate of 8748 crore. EBITDA was also up 11% from last year, 911 crores, but that was a significant miss from the estimate of 996 crores. The margins at 10.6% was a 60 basis point expansion on a year-on-year basis, but around 70 basis points lower compared to what the estimates were of 11.3%. The net profit also was down on a year-on-year basis and also below estimates as well. Now, coming to what the commentary the management had to say is the fact that they are saying that the volumes that they had in the first quarter are comparable with the first quarter of FY19, which was the peak, which was the previous peak that they had, and the CV volumes that they had this quarter were the highest ever, and they remain focused on achieving a mid-teen margin going forward in the medium term. And they also spoke about the launches that they plan on doing. They said that they are planning to launch their second ELCV, which is the LEV3 this month, and that will also contribute to gains going forward. And the stock has recovered almost 2% from the lows of the day and is trading at a current PE of 27.1 times, which is in line with its 5-year average multiple of 27 times as well.
Okay, got that. Thanks very much for it, Horma. So those are the two auto stocks in focus. Dilip, first, let me get to Tata Motors. I mean, this update that's come in, the brokerage note, that's really caused a fresh stir on the stock, 5% higher. What's your sense? I mean, do you think at these prices, there's still more value left on the table?
I think Tata Motors certainly has some more steam left without any doubt. But would I buy at these levels? No. If I'm holding on, I will certainly hold on to my investments, but I will not think about buying. But I think some of the statements, some of the corporate developments that are going to happen out over there in terms of the demerger of the CVs and the passenger vehicles, I think some of these corporate events will help Tata Motor remain in the radar of a lot of investors. And possibly, when these kind of things happen, there is a value which gets unlocked and the SOP really turns out to be much higher. So what I would say is that Tata Motors, yes, I would still hold on, not make any fresh buys in the current levels.
Okay. All right, Dilip, we will leave it on that note for today. Thank you so much for joining in. Appreciate you being with us. We'll take a break, come back on the other side, and we'll have Nilotpal Sahai of HSBC Global Asset Management to give us his sense on the market.
Okay, it's a wonderful screen because the global markets have been down and out. Europe is down, Asia ended lower, and of course, US did what it did. But here, I mean, it's just sort of nothing. 10-point cut. It's as flat as they come. And there is enough happening in terms of stocks on the upside as well. Market breadth, by the way, it's not just the Nifty. Market breadth is almost evenly split, 1:1, almost one stock up for one stock down. There is some news on Glenmark Life, and we'll have more context on this in just a bit. But the company has been asked to deposit interim environment damage compensation. That is what is coming through. Gujarat Pollution Board directs closure of production activity at Ankleshwar unit. That's essentially, but the stocks it was up 3. I think it's up 3 even after that news has come through. We have Nilotpal Sahai, who is head of equities and fund manager at HSBC Global Asset Management. Nilotpal, good to have you with us here. Thank you for your time. I mean, I don't think I should ask you whether you are surprised by the resilience, because you know, it's a constant thing, right? Whatever you throw at the market is just been rock steady, and I think it's just been a function of very strong liquidity, which is coming in every day, but also a lot of cash which mutual funds are sitting on, right? Nimesh, our colleague Nimesh had done a piece about 1.25 lakh. The number is a week old. It would be larger now. So just how do you navigate this? Do you think if, say, for example, the US tech sector takes a bit of a dive, it will have any impact at all here in the market?
Thank you for having me on the show. Yeah, a very pertinent question, and this is a question that we deal most often these days, is that why is the market so resilient? So obviously, part of the answer lies in the fact that the wall of liquidity, which is very strong and continues to come at every day. So there was an event 2 days back, the union budget was presented. There was a bit of uncertainty and apprehension about the budget, what could come, and now that has also gone past. In fact, there is a sense of relief because there is a policy continuity which is there, both in terms of the tax regime, the slight increase there, but most importantly, in terms of where the direction of the government could have been with respect to the capex and consumption. There was an uncertainty about the fact that how did the government read the mandate, and this was the first policy action after that. So a lot of would have depended upon how they would have read the situation. But what has come out is a sense of broad-based continuity, which is there. Now, given the fact that what we continue to always maintain, that the most important thing is the corporate earnings, and in the last 3 years, the corporate earnings have become 3x to 4x for the Nifty companies taken together. And going forward as well, the expectations are in line with 13 to 14% CAGR for the next 2 years. Now, that's a consensus number. Unlike in the past decade, where the corporate earnings numbers were not met, we are meeting the corporate earnings number for the last 2.5 years or so. So if you combine all these factors of the liquidity as well as the corporate earnings remaining strong, and the average valuations also now having gone up on account of the higher ROE, is that there is, especially in the large caps, the valuations are fair. So I would tend to think that the money can continue to come in and still we can get the investable ideas at these levels also.
All right, Nilotpal, just hold on to that thought for a minute. We just have Loris Labs. The numbers are up for our viewers on the screen, and it appears a rather weak set of numbers actually, because there's a big margin miss. Even the absolute EBITDA number has missed our estimates by quite a large a bit. Remember, on a sequential basis as well, this 14.5% odd compares to around 17%. When we are at CNBC-TV18 had spoken to the management last, they said at some point of FY25, they expect to give margins of close to around 20%. For starters, though, it's way below that. So we'll have to gradually observe how exactly, this margin trajectory improves, because we had quizzed the management and they said they're quite confident about the 20%, but growth needs to pick up and then margins as well will come about. For the time being, this set of numbers are rather weak. Well, hi, Nilotpal, and thanks a lot for speaking to us here at CNBC-TV18. Well, as you said, you prefer the large caps in comparison to the broader markets as of now, and that would make sense because valuation-wise, well, that still looks more attractive in comparison to what's happened in the mid-cap space. What are the sectors you like as of now? Banks, everyone's quite positive over there. The problem now is suddenly the FIs have returned to the selling side of things, and their largest exposure is to the banking names. So in spite of fairly okay valuations, you still have selling out there. What's your preferred sector?
So actually, our preferred sectors are real estate and the industrial complex, the pro economy plays which are there. On the banks, we have a neutral to negative view, especially the lending banking sector. If you look at the wider financial sector, then we have got a more positive view on some of the non-banking finance companies, which are doing pretty well. And we also have got a positive view on the capital marketplace. But when it comes to the banks, we have a neutral to negative view, and that is because of now the weakening earnings momentum. Even though the valuations are among the most comfortable across all sectors, but we are now beginning to see first signs. Whether we can extrapolate the weak NPA trends or not, I'm not very sure. But still, the first signs of the NPAs have begun to come in both from the banks as well as from select NBFC. So I would say yeah.
So this, neutral to negative call on banks is for PSU and large cap private sector banks, right?
Yes.
Both. Okay. What about real estate? You said you're constructive on real estate. There has been a taxation change in the budget. How does it impact listed players for investors, retail shareholders who hold real estate stocks?
So firstly, a lot has been talked about the tax change in the budget, but let's look at the numbers and then we realize that it impacts on the individual case-to-case basis. If somebody has seen huge price appreciation in their property, then for them, the new tax regime is better. On the other hand, if somebody has not seen the huge price appreciation and it is more or less in line with the inflation, then the old regime is better. Having said that, we should also note that the investment into investable in the Section 54 of the IT Act is still available in the new regime. So one can still save tax even in the new regime. But I also must add that the majority of the purchase in the real estate is for personal consumption. And there, the important factor is not the end taxation, but the more important factor is affordability and availability of housing loan. And affordability consists of the EMIs and your income levels. And EMI is dependent upon the property value as well as the interest rates. So I tend to think those are the more important factors than compared to the tax structure or the change in the tax structure which has happened. Now, having said that, let's look at some of the structural trend which has happened. For starters, demand continues to remain strong and keeping pace with the strong pre-launches as well as the pre-sales, the numbers that we see. One data point is that inventory to sales of top 7 cities is now down to 1.5 years as compared to 3.4 years in fiscal 18. The second data point with respect to affordability is among the best that we have seen in the last 15 or 20 years. That continues to remain very strong for the buyer. When it comes to the sector itself, then the disruption has also meant that the consolidation is happening in favor of the larger players, predominantly the listed players. So both from the property buying as well as investment in the property companies is concerned, that we continue to remain constructive. It has been an overweight sector for quite some time, more than 3 years or so. And across our strategies, we are constructive here.
Fair enough. Got that. Thank you very much, Nilotpal. We will leave it on that note for today. Thank you so much for joining in. I really appreciate you being with us today. By the way, those numbers that came out for Westlife, once again, extremely disappointing. I mean, the going has been difficult for a lot of these QSR companies, and Westlife has seen a big drop in margins as well. It's a top-line miss. I mean, top line hasn't grown at all. And it seems that those operating costs are really eating into margin. Stocks down 3%. And this after being a very poor performer over the last many months. In this year, calendar year 2024, Westlife hasn't done anything. It's absolutely flat when the market has galloped along. And over the last 1 year, if you look at a 12-month time frame, then it's actually down 9-10%. So QSRs, the going is simply not improving because the consumption patterns have been more on the discretionary side, more premium side of things, perhaps. So there you go. And not much changing in this quarter as well. We do need to take a quick break on that note. Come back on the other side, and we have a special announcement for you about an exceptional evening where we are honoring the heroes of India's economy, a prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick, With a 5 trillion economy on the horizon, we must acknowledge the heroes, our small and medium enterprises. India's one of the coveted SME award platforms is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards, all set to finally announce the winners tomorrow, 26th of July, 5:30 p.m. onwards. Welcome back. Let's move our focus to SBI Life Insurance. Stock has been doing well. The company reported a 20% jump in total APE, or annualized premium equivalent, in the first quarter. Colleague Yash caught up with the company's MD and CEO Amit Jingran and started by asking about the strategy towards growing the protection book. Take a look.
We had some negative growth in the protection segment in the first quarter. But to counter that, we are coming with some new products. One of the products will be on our major banker partner SBI's online channel, YONO that is. And that product is we are shortly going to launch. With these products, we expect that we will be back on track with the kind of growth that we have been seeing in protection segment earlier. Okay. And that will take care of our...
And what could be that number Q2 onwards, and for FY25, the protection growth both on the individual and group side? You said that you will get back to the earlier growth. What could be that number that the market should look at?
We are looking for a total protection contribution to our APE mix in around 10 to 11% kind of number.
Okay.
So with these products, I am very sure that we will be able to drive that number.
What, according to you, could be one or two biggest risks, as you see, to your guidance of 28% on the margin?
Of course, the product mix remains the biggest risk for us, because ULIP, you are aware that have lower kind of margins. And with the kind of traction that ULIP has in this market in the country at present, that is the biggest risk to us.
What is your analysis in terms of the kind of impact that you could see on your VNB margins because of higher surrender value?
See, so regulators' action, I firmly believe, are always good for the industry in the long run. SBI Life having a much higher share of ULIPs,
correct,
the effect of surrender value on our margins are going to be the least.
Okay.
Even in our non-par products where surrenders happen, our surrender percentage is very low, and our surrender values that we were offering as of now were already higher than the market and much closer to the enhanced surrender value that the regulator is now asking us to improve. So based on those facts, we are sure that the effect on margin for SBI Life will be much lesser than other industry players.
Okay, much lesser would be if someone saying 100 basis points impact. What is your understanding on the quantification of the impact?
Yeah, so yes, that is, I know you are very particular about numbers and you want me to say something.
Could it be just half of that, about 50 basis points?
You can say that it may be around 50 to 60 basis points only.
Okay, that's the big mover of the day, SBI Life on their numbers. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTST calls from our technical experts.
Welcome back. Well, let's focus on the Laurus Laboratories stock. You know, the stock was lower in trade, but it's seen a big recovery from the low point of the day. That's because of the commentary. The FY25 outlook they've maintained. They're looking at delivering in the medium to the long term. Now, the contracts as well as commercial opportunity in the late phase NCE. And also they go on to state that projects with EBITDA margins improvement, that's something that they are focusing on. So because of the positive commentary, the stock that was down close to around 3%, 3.5% odd, well, we've seen a big recovery. And, you know, the last I checked, actually, the stock had moved into the green. We'll be talking to the management tomorrow and we'll quiz them. What are the timelines when you see the margin improvement? But for the time being, the street has bought into the stock because of that positive commentary that's flashing for you on the screen. Well, let's get back to the markets then and let's get an insight into D-Street chatter. Nimesh joins us to fill us out with what he's picking up. Well, Nimesh, what are you picking up? That's sort of a day, right? You throw the negative news, and the bull just come and they punch it away.
Absolutely. So, a good recovery intraday in the markets. In fact, the Nifty is almost in the green. And despite on a day when you see such a weak global cues, right? Still. Overnight, we saw Nasdaq down 3% and still we are almost in the green. So, that's the kind of a market. Looks like, today's recovery is also backed by institutional buying. So, the sense I'm getting is that some bit of cash is getting deployed at these levels from the domestic mutual funds. Even from an FI flow perspective, we've seen large sell-off in the last couple of days in the cash market. But that looks like today there is a small basket buying is what I understand at the leading FI. So the FI number could be quite interesting. But remember, because of the expiry, it might get skewed a bit in terms of the institutional data. Also, the big large block deal of RBL Bank of 1,100 crores will have an impact on the institutional flows today. The bank Nifty was a big pain point, right? And rightly so because of the weak numbers from Axis Bank. But even there, we've seen a bit of recovery, and largely it's recoveries on the back of HDFC Bank. Now, the feedback is looking at Axis Bank and some other private bank numbers. There is a chatter that maybe the HDFC Bank numbers look quite good, and maybe that explains a bit of recovery in HDFC Bank stock today. Technically, I guess 24,100 is a big crucial support level on the Nifty on the downside, so that needs to be watched. But given the fact that there's so much of liquidity which we've been talking about, the dips are getting bought, and today looks like it's a day where the recovery is backed by institutional buying.
Well, that's right. The 24,100 very important. We went there on the budget day, and from there we recovered.
Not even on budget day, even on July 4th on the election day. I guess that was a level from where we bounced back. So I think that's a big support level now.
Okay, all right. Nimesh, what about individual stocks? What are you tracking?
Well, earnings season, as and when the earnings season gets over, the blocks are back. So, and again, Axis Bank was a classic example. RBL Bank was a classic example. Results done, and the PE sold their entire 7.5% stake. Now I understand the next big deal to watch would be Hitachi Energy. The stock has almost doubled in the last, say, 6 months or so. And why today the stock is almost doubled, sitting on a market cap of close to 50,000 crores. Now I understand there could be a large block deal very soon. The promoter entity owns 75%, so it looks like the parent could sell a large chunk in Hitachi Energy. So that's the first one. The second stock is Tata Motors. Again, big move on that stock on some strong buying as well. There was a number upgrade in the morning. They've hugely upgraded the stock to a buy, and they've raised the target price sharply. And I guess that reflects in the stock price today. The third name is Avenue Supermart. Quietly, the stock has relatively outperformed in the consumption basket in the last couple of months. And now I understand some long-only funds are quite active. A leading long-only fund is actually looking for block bids as well in Avenue Supermart. And the last is GAIL India. Well, the entire gas energy basket has done well today. GAIL India stands out purely on back of buying flow. So I understand a domestic leading mutual fund is an active buyer in GAIL India, and hence big move and in large volumes as well.
Nimesh, that Hitachi is interesting. So another Whirlpool, Timken. I mean, on those lines, you said promoters hold. Yeah, sorry, go on.
Looks like, Prashant, as I said, the promoter entity owns 75%. The stock has doubled in the last 6 months, trading at 50,000 crores of market cap. I was just looking at the trailing P. The stock is trading at a trailing multiple of 307x. I was just looking at the parent's valuations on Bloomberg, and the parent on a forward 25 price to earning is quoting at just 22.5 times. So big valuation gap between the parent and the Indian listed company, and maybe that could be the one reason why the parent could look at. So I don't know. I mean, frankly, I'm not too aware of the timelines, but the indication is that the work has started, and potentially there could be a block in Hitachi Energy very soon. And as I said, the promoter, because they own 75%, could look to dilute and raise money here.
300 times for the parent, 20 times for the India entity, right?
No,
those are numbers.
The other way around. 300 times for
300 times for the India entity. Of course, yeah, sorry.
And parent quoting at
Maybe we should write to the parent telling them what happened to Whirlpool. Whirlpool, the global sold, and the stock doubled.
The stock is doubled, yeah, exactly. So that's the kind of liquidity, right, Prashant? And in fact, a lot of large HNI investors have been talking about this, right? I mean, they've never seen in their lives a parent selling out, and after that, the stock goes up. So that's in the market for you.
Yeah, absolutely. And that's why a lot of MNC IPOs are also expected, right? I mean, I think Hyundai will be the first one, and many more after that. Well, Nimesh, thanks very much for that interesting list of stocks. Ashish Kayal is back with us. Ashish, 310 calls, 318 actually now. But what do you have?
See, if you look at Jyoti Labs, it showing a very strong break in today's session. Got some profit booking, but I think the stock can continue to move up from here on even tomorrow. So it can be a very good buy at these levels. And we can expect the stock to reach towards the level of 580. One can maintain a stop loss of 535. And the next stock can be BTST, which will be SBI Life. We can clearly see it's near the day's high. The stock has shown very strong momentum. It's not stopping anywhere, and we can clearly see there is no upside hurdle as well. There is no resistance as the stock trades at 52 weeks high. One can create long positions here, aiming for the target of around 1780 on the upside, and we can maintain a stop loss of 1635.
Thank you very much for that. In the next 30 minutes or so, we should have numbers coming in from Tech Mahindra. It will be the last of the large cap IT names reporting numbers. Expect a muted quarter, a little bit of a growth on the top line. So constant currency revenue growth is seen about 0.4, 0.5%. The telecom business growth will be under pressure, but the other businesses are likely to, perform slightly better. Some improvement in margins. Remember, Tech Mahindra's margins are much lower than peers. It's been in, mid-single digits. So this quarter, and there has been a slow recovery in their margins, but margins are likely to inch up, driving a 33% jump in the company's profitability. Well, there are a few things you need to focus on. One, the company under the new management, the CEO, Mohit Joshi, has laid out that margins will improve to 15% by FY27. So that's 3 years hence, a little less than 3 years. But what will be the glide path? How much can you improve margins this year? Secondly, deal wins for Tech Mahindra last year have been lower than what we've seen in the prior year. So in FY24, average deal wins were about $400 to $450 million every quarter, which compares with an average of $700 to $750 million. So secondly, is there a pickup in deal wins for Tech Mahindra? Because peers are reporting very strong deal wins. So those would be the two key things to watch from Tech Mahindra this time. Get into a break. We'll come back with more on the markets. 10 minutes for us to close trade.
Welcome back. Well, a few stocks are moving and they're moving higher as we speak. Loris Labs is the one that we had already highlighted that the street likes that they maintain their outlook. So that's why that stock popped up. United Breweries is putting on some weight now. That stock is at the high point of the day, up close to around 4%. And India Cements is another one that's perked up in trade. So keep an eye out on a few of these names. Independent market expert Amrish Baliga joins us on the show. Hi, Amrish. Good afternoon. Good to see you, Ben. Let's get straight to a stock idea. What do you have for us today?
Good afternoon, Nigel. The stock which I have for today is Bank of Maharashtra. I mean, it's quite an old bank, established in 1935, about 2,500 branches, mostly in Maharashtra, as the name goes. In the last 3 to 4 years, we have seen consistent improvement in performance. I mean, if you remember, the stocks to quote at about 12 to 15 rupees in those days. In Q1, it's posted the highest quarterly net profit till date, about 24% up. Y&Y, clearly beating expectations. The overall deposit book also has climbed up about 10%. And if you look at the loan book, that's climbed about 19%. Asset quality has improved sequentially with gross NPAs falling about 16 bips, about net NPAs falling about 2 bips. Currently, it's about 1.85% and 0.2% respectively. And the focus is still on the NPA reduction. In fact, there's a special NPA reduction plan through a one-time settlement, and expecting about 500 properties to be auctioned by September, which will actually bring down the NPAs still further. Expecting an EPS of about 8.5 for FY26. So I have a target of 85, which is about 1.75x the adjusted book value. And I mean, if you look at the last 6 months, it's been consolidating extremely well in this region of about 60 to 70, 72 rupees. So I think it's surely time that we could see levels of 85 over the next possibly 6 to 8 months.
Okay, got it. Amrish, just getting your thoughts on any of the earnings today. By the way, Jyoti, we haven't discussed this stock. Jyoti Laboratories again came out with a phenomenal set of numbers. I mean, the revenue, the volumes, I don't know how they're doing 9-10% volumes, but they are, and the stock's up 7-8%. So in case you have any thoughts here, or maybe in Ashok Leyland, or even Nestle, I mean, some of the key results of the day. Anything that you like?
In fact, Jyoti was on our buy list. In fact, we have a price target of about 570, 580. I think I'll have to revise this now looking at the sort of earnings which have come. I mean, clearly, it was painful holding Jyoti about 2 years back. But then the sort of performance they've been showing for the past couple of quarters, and especially this quarter, I think we should see much better levels. I mean, at least looking at the results, I mean, the initial thought is, I think the target price should go up to at least 640, 650. So I'll just hold on.
Any thoughts on Protean eGov? This is a stock which has moved up 60% this year. It's a creator of digital infrastructure. So even in the budget, there is so much emphasis on formal job creation, first-time employees with the EPFO. There will be a contribution given by the company, the government to the company. So since this company caters to the NPS, it helps with PAN card issuance, verification, etc. It's expected to be a beneficiary of this formalization of the workforce. But the stock is up 60% this month. Do you track it?
Yes, I've been tracking this on and off, and the sort of like announcements which have come in the budget clearly is extremely positive for Protean, and because of which we have seen this move. But post this move at the current levels, I'll not really jump in and buy fresh, because the upside, immediate upside from here could be quite limited. I mean, if you're talking of the next 2 years, yes. But then before that, I think we should see a decent correction to buy in. I mean, I would be comfortable buying this stock closer to about 1450, 1500 levels, not at the current levels.
Okay, by the way, look at Adani Green surge, 7.5% numbers today. Stock's up about, 7.5%. The surge has happened in the last half an hour or so. The other one is Tata Motors DVR. So not just the basic share, the plain share, but even the DVR is up and away, 6% on the higher side. I think we are down to the last couple of minutes. So let's start recapping what has been another resilient day, strong day. The reason we say that is that you have to constantly contrast the Indian screen with what's happened around the world, with many of the European markets still down 1.5% to about 2%. Wall Street under pressure, all of Asia selling off. But then we've had a buy on dips play out yet again. And this, by the way, despite a lot of selling in the banking side of the market, because the bank Nifty is ending with a cut of almost 1%. So banks are a problem, but then there are other pockets of the market which have seen plenty of traction. So Tata Motors, as I was just mentioning, is the leader on the Nifty, 6% higher. ONGC is keeping it good company. ONGC up about 5%. BPCL also from the PSU space about 4% higher. L&T's numbers have been very well received by the market. Almost 3% up on L&T as we are actually almost 3% up on L&T as we're closing out. Kotak Mahindra Bank and HDFC Bank have tried to mitigate the huge downside pressure that Axis has exerted on the index today. So these are the ones which have tried to sort of counterbalance to an extent. And we've had some buying on tech names, TCS, by the way. Let's look at TCS, check out Wipro as well, some green over there, 1.5% higher. Not so on Infosys, but TCS and Wipro, they have been gainers on the upside. But guys, I guess, Axis remains a big watch point now. ICICI Bank, let's see what it says. But yeah, from the large cap space, maybe probably the most disappointing earning in the last 24 hours.
Absolutely, no doubt about it. And, just what, I think we're just a minute away still from the market close. And it's going to be a flattish kind of, look at that. I mean, the sensex is down 70, the Nifty is up about 1.6, 1.7%. We'll have, of course, Tech Mahindra numbers also in the next 1 hour or so. Actually, maybe in the next 30 minutes. And that's the one to watch out for as we come back tomorrow. Tomorrow, I think we'll also have numbers from Emphasis. And, of course, going into the weekend, there'll be ICICI Bank, etc. So, yeah, I mean, lots of earnings to really track. But more the number of disappointments clearly a lot longer as compared to, there's no real stamp. By this time in the earnings season, you have 1 or 2 really blowout numbers. Do we have a few? I'm not sure.
Ashok Leyland, Nestle, nothing today. I mean, barring Jyoti, even Jyoti is not a large stock, barring Jyoti, which was
SBI Life is a pretty decent set of numbers.
The insurers, yeah, they've been doing a good job.
Insurance companies have reported good numbers.
Yeah, no, absolutely. Okay, so I think it's a wrap on this edition of Closing Bell here from all of us. Goodbye. Thank you very much for staying with us. But there is market forward. Rima and I'll take that forward in just a bit.